All right, welcome back. Welcome back, everybody. Welcome back to the channel. I appreciate you guys for joining. Just clicking on this video means a lot, so I definitely appreciate that. So if you guys will be kind enough to drop a like on this video, even if you don't want to subscribe, that's fine, but at least drop a like. Help me get in that algorithm, right? And we're going to get straight into this video. Today we're going to be looking at MNQH, right? Nasdaq future chart. All right, so you guys can really see, because sometimes there's a new week opening gap inside of a new week opening gap, right? If the new week opening gap is big enough, it can have so many smaller ones inside of it. Right, so for example, if I made this new week opening gap yellow, normally I keep all of my new week opening gaps purple, right? But if I made this one yellow, you guys can see that this new week opening gap right here has that smaller one on the inside right there. All right, so we have about 2 more minutes until market open. We are going to be marking out the highs and lows from the hourly chart. Right, I like to use a yellow line for this. Just real simple strategy. Just always know where the liquidity is. All right, so let me zoom in a little bit. I marked out these lows right here on the hourly. Swing low. You see how it's not even perfect, right? I'm just trying to do it real quick. And then we marked out this high up here on the hourly time frame. We're looking at the Nasdaq chart, by the way. We have another one down here. This is around the midpoint of this new week opening gap. What a coincidence. So we're going to be keeping our eye on that as well. Right, we know that this swing high right here on the hourly price have already broke above that. The information that we're looking for right now is, do these 2 order blocks right here hold up? So far, if you're looking at this candle, even though it is a red pin bar, it would have been better if it was a green pin bar. Regardless, it's still a pin bar candle. So it have already rejected one time from this area. But because, liquidity is where it's at, we have to see what's going to get violated on an hourly chart. So price is pretty much in a weird situation right now because it's being held down by these gaps right here, right? Look at how these bodies are closing on this new week opening gap from February the 11th. Look at how these bodies are closing. That don't mean that it can't go up there and sweep this liquidity up here. We have other areas that we're, right? So ultimately, all of that was to say, our bias is looking like we want to try to find buys, right? Stay with the trend. Obviously, we see our liquidity up there. So we're just going to be patient for that. Y'all know I've been trying not to trade the first 30 minutes of the day. It's just not a part of my strategy. All right, I try not to trade the first 30 minutes of the day. Unless it's like very obvious. It has to be unbelievably obvious to me if I'm going to trade the first 30 minutes. And even then, I won't really put too much risk on. You got to go real small. So far, the market is stalling out. we're going to jump from time frames. Just make sure that we know a little bit about every time frame. The way it's stalling out, you would have thought it would have wanted to go up there much faster and sweep that liquidity, but that's why trading the first 30 minutes is difficult. All right, let me look at the 4-hour chart. Make sure I'm aware of this wick on the 4-hour. Make sure I'm aware of the midpoint of that wick right there. Drop back into the 1-hour. All right, and then let's see if I can go to the 5-minute. Kind of information. So I do like how the market respected all of this down here. This gap, I like that. The body's closed very bullish on that new day opening gap. So you would expect to see it want to go through this yellow line up here, but I don't like how it's stalling out. We're going to see what happens, Maybe it needs to sweep some liquidity on the downside first. Who knows? All right, we do have this new week opening gap down here. Mysteriously resting below the liquidity. So you got to be aware of that. Y'all know these new week opening gaps are like magnets. And then that bigger new week opening gap, the midpoint of that is right below here as well on a 5-minute chart. So whenever you don't know what side of liquidity is going to sweep first, that's why it's best to just wait. Sometimes I don't even look at it from the 5-minute time frame because, that may make you want to take a trade. You might want to take a scalp, and then the scalp turn into a long hold, and before you know it, you might just lose that trade, right? So I'm looking at the 5-minute time frame right now. So CCC boxing, this is TradingView. I'm looking on TradingView right now. You can actually, there's multiple ways you can get started trading. It just all depends on what route you want to take. If you want to take the prop firm route, like if you're a beginner, I like the prop firm route for beginners because you can buy a prop firm account for like a really cheap price. Like, let's say $40, right? Alpha Capital got $40 accounts. A lot of companies have like $40 accounts where you can get practice and, potentially eventually earn a payout, because the reality is if you're a beginner trader, it's either you just want to use a demo account, which is fake money. Some people don't like doing that because, it don't give them the proper experience that they feel like they need. Or you can use a prop firm account, which is also fake money, but you have the potential to get a payout. So what I would say though, don't use real money. That's for sure. Do not use the real deal if you're a beginner. And if you use it, you got to go very small. So that's why having a real account as a beginner is hard, because you might start off with like a $300 account. More than likely, you're going to lose it. So instead of just losing that $300 in a real account, because you can do that off of one trade, the ideal is like at least buy a prop firm account, and then you can take multiple trades, actually have the analytics right there on your dashboard, and you can learn a lot about trading, right? So it's a community and everything. So good morning, Melissa. It's good to see you in the chat. I hope y'all dropped a like on the video for me. So far, the market is doing absolutely nothing. So this is why it's so important to wait until that 10 a.m. close, because you can avoid getting chopped up. Some days the market just goes straight up or straight down, as soon as it opened at 9:30. Some days it don't. Right? If we go to the 1 minute time frame, because I'm waiting for that first presented fair value gap. So it looks like that first presented is going to be right there. Technically, that's the first presented. Technically, it's right in the lower half of this new week opening gap, which could possibly mean that this area right here is going to hold price down. We're going to see. It might even be a breakaway gap, but I still wouldn't trust it before 10. Before 10, I can't trust it. You just have to wait for a price to dance around and give you more insurance, because this is essentially the middle of the range, right? We have liquidity down here where these yellow lines are, then we have liquidity up here, which means what? We're in the middle of a range. 10 times out of 10, when you trade in the middle of the range, you're going to lose. Also, CCC Boxing, if you just subscribe to the channel, stick around, you will learn a lot about trading, and how to manage risk. Because I'll be honest with you, I've lost a lot of money trading. So I always tell beginner traders, like, don't come out too hot, because that's the only way you can really lose a lot of money. Like, trading takes time, and it takes effort and consistency and a bunch of other things. So just take it one day at a time. That's all I can say, man. Take it one day at a time. Yeah, that's the technical first presented fair value gap. So that's why I put that. Had the box, the sky blue box. So if you're ever watching any of my videos back, the purple box is more than likely going to be a new week opening gap. The orange box is going to be a new day opening gap. Those are the main, the things that I use. So if we don't hit this first presented fair value gap, it could just continue to go down, sweep some liquidity, but I think I'm going to have to miss that because it's just too choppy. On the 1 minute time frame, just look at where it's been at for the last 6 minutes. Going on 6 minutes now. Haven't done anything. Right? It went up and then came right back down. That's truly the definition of doing nothing right there. Just now it's going to hang around this first presented fair value gap for the next 30 minutes. And if it do that, we'll probably end this stream a little bit early, because on the days where the market is doing nothing, it's like, why would I want to trade those days? Can the 933 candle give direction? For sure. All about how these candles close and, play around. So, like, if this gap, if, like, let's say if it get touched, and the Nasdaq can do some crazy stuff. But, like, let's say if a candle goes all the way up here, but still closes all the way down here, that means that it's still respecting this gap. Obviously, if something like that would happen, that would also mean that this market could still be choppy, and it just may chop around. Right? That's what all of these gaps do, the same thing. So even how when they went into this new week opening gap right here, came back down, now you see it's just touching the lower part of that new week opening gap. Right? it could still get to the midpoint of that new week opening gap and still be bearish the way it's looking now. Like, because all of this is on the short term, right? The last 6 minutes is looking kind of bearish. Like I said, I'm not going to trust it. I'd rather just wait until after 10, and if something's set up after we get a liquidity sweep, then I would rather be a buyer than a seller. Even though it's coming down, if you're trying to trade from the first 30 minutes, I will have to be looking for a sell. But obviously, I'm not doing that because this is too stressful for me. There's just too many things that can happen. Like, it can even come down right here and just pop all the way back up, you know? So, like, if I did take that trade, I would have already closed it. So it's not even worth it for me to take a 30-point trade that may work. He was weak on the 5 minute. Let's see what the 5 minutes talking about. Oh yeah, that definitely he was weak. Let's measure this week out and see something. So did it hit the lower half? Just about. Just about. But it went into the 5 minute wick already. So that's another bearish. For the trend line people. All right, you got a little arrow coming down like that. But the market just not moving fast enough for me right now. So, and every time it goes to a key level, like look at how it went to that new day opening gap and rejected away. So that's why I said if I was in the sale, I would have already got out because the most it may give you is a scalp, right? And then this market could just dance around for however long. So it just may be a day where you can't really trade, you can't find a trade, and that's okay, you know. But I'm just giving y'all my commentary. So far, I haven't done anything. Like I don't even have my trade locker open right now because it don't even feel like anything is happening. Now you get this is one of those no bueno type of days. Wouldn't you agree?
I would agree.
If it don't do nothing by 10 a.m., time to log out and get some sleep. But on the 5 minute, it's closing bearish on that new week opening gap right there.
Uh-oh. Trouble for the 9:33 a.m. candle.
Mm-hmm. It's working up in that first presented fair value gap now. So I'm gonna drop back into the 1 minute and see how these candles close in this first presented fair value gap. Let's see what we do. Just like I said, it's just bouncing around from one key level to the next. Right back to the same spot it was at for the last what 16 minutes at this point. It's been in this same area. This market is doing absolutely nothing. It's putting me to sleep. I do know that. Sportly, thanks for the follow on Twitch. I really appreciate that. Definitely appreciate you dropping a follow on the Twitch. Let me go check on my Kick fam too. My Kick fam been quiet lately. My Kick fam been quiet. I'm going to give this market maybe another 30 minutes. If it's not dancing, we can end this stream early, and then that will essentially be the lesson for today. All right, learn how to read price action so you can avoid the choppy markets. All right, that could be the title of this video. I might switch it around, I may not. We'll see. All right, babe. This range is just consolidation.
So it's best not to trade until 10.
For real, just to make sure there's no more fake outs. Because it's not that the market may not, move today. It's just this first 30 minutes for sure is the chop. This is the 30 minutes that exhausts everybody. And then now you don't even want to trade no more. Then when the move do happen, you're like, I knew it. You're like, I knew it. Especially if you over leveraging on a day like this. Yeah, you're going to have a headache. Some ICT traders love these markets because, as you can see, it's respecting all of our levels perfectly. You you already know you got degenerates that will try to take this sell, especially after they seen it. There's probably still somebody trying to sell right now. And it's not even that they could be wrong, but it's like if it sweep all of this liquidity, okay, I guess that's a 1 and 3, but it's essentially a guessing game, that's the thing I don't like about it. So even though it looks good, I would just rather be a buyer in this type of market, right? Because we have places we can go to up here as well. So we just don't want to be caught up in the middle of the range. That's why sometimes it's best to just watch it from the hourly time frame. All right, I was just showing you guys that because I wanted to make it more educational, I guess. Right, then when it comes to the Fibonacci tool, we got a swing low down here. Because this is the hourly, you can start from this range, and then you can use this entire range right here. And then so obviously discount is down here, so it would just be better for the market to go down, especially based on everything that it has done already. So I mean, this could be a good sell idea, but I still want to wait because I just don't want to get caught up in any choppy conditions. Honestly, that's what it's really about. Most of the time when I push the button, I like to be in profits real fast. So if I want to close for profits fast, I can do that and then move along. So just based on price action, I would be thinking more sales at this point. I didn't want to be a seller, but the market don't care what I want. So even if it don't break an hourly high, if you wanted to trade a day like this, you just have to realize that this more than likely this liquidity to the downside is going to be the target. But it might take a million years for it to get there. So you have to be like, if you trade a day like this, you have to just have that in mind. And then you also have to use a safe stop loss. So you can't try to have your stop loss jammed up. Because if they flip the manipulation switch and then they want to go hunt some people's stop losses, that's exactly what they will do. So that's why waiting for that hourly candle to close, and hopefully it have swept liquidity by 10 a.m., which as you guys can see today, it did not sweep liquidity by 10 a.m. Right? I mean, we still do have 4 minutes for the 1 hour candle to close, but does that mean it's going to make its move to the downside right now? Who knows? It's possible. But I just don't like this price action right now. I'm also going to check the 2 minute. Make sure I'm aware of all of the time frames, the 6 minute, because the 1 minute don't even look that clean. It can fool you into thinking that, it's bearish, but you start looking at other time frames and it's like, it's cleaner. It might look a little bit cleaner for the bulls. So the key levels are holding and we're just stuck in one spot. So what do all of that mean? Long story short, just don't even trade days like this. Even though we all want to trade every day, these are the days where you really blow your account and go into drawdown more than any other day. Especially if you over leverage. Some people like scalping these little markets because you might can just take it from here to there to there to there. But be careful. You can only do that, so many times before the market says, "All right, let's get them together." So if we start really dropping aggressively, I don't mind putting on a baby entry, trying to follow the momentum. But we need to see more information on a 1 minute time frame. And if I do take a trade, I'm like trailing everything into profits almost immediately. So we just swept one area of liquidity on what is this? This low right here. Oh, that's my. All right, sorry, I gotta undo that. Let's undo. All right, we had a swing low right here. So it's looking like we're going to have a strong close going up. But one thing I learned on consolidation days, like my strategy don't really work the same. Sometimes it does the opposite. But let's see. Based on how that 1 hour candle just closed, we should be able to figure out what's holding price up. Let's go to the 5 minute. It's making higher highs. Higher lows. 15 minute. All right, let me see if I can catch something on this trade. I have to see if I can wait for a swing low to be created right here. And then if we can get a retracement up, maybe I can catch it, but it already swept liquidity once. So like I said, it might do the opposite. Let's just wick hold up, but I don't trust it. I'm looking at the 1 hour chart and it just makes me want to be a buyer so bad, but I don't. The 4 hour chart definitely makes you want to be a buyer as well. It could pull back a little bit more though. Let's see. I need to drop back into the 1 minute. I think it just pulled back right there on the 1 minute. Let's see what happens. I'm gonna go to the 2 minute time frame. We do got a little bit of a gap right there on the 2 minute. I probably should have been trying to use that gap for a sell. I think that's what I'm going to do. It is a bit risky, but I think that's what I'm going to do. If I could get another pullback, it might not come pick me up. All right, we're looking at the 2 minute time frame. We do have a swing low on the 1 minute, so let me see. I'm going to use my Fibonacci tool. We're going to go from swing high to swing low. Our discount, if we use the overall range, that's where our discount is at, right where I want my stop loss to be. So maybe it's not a good idea to put my stop loss there anymore. But let's see if it hangs around this quarter level, which is the lower area of the Fibonacci tool. If it hangs around there, we might just, continue to go down a little bit faster, and that may actually be a good stop. So I just have to wait for that information. I just said earlier, on days like this, you really want to have your stop loss in the right area. If you try to jam it up too tight, that's when they come and get you. So let me give you guys an example of what I was talking about. Like right here, it could be possibly the sell. I was thinking about doing like a sell like that, and then targeting these, these lows. I mean, it's a 3-to-1, but because it's a choppy day, it just could easily go back up. Right? Remember, I said I prefer to be a buyer, but it's just keep coming down. It doesn't mean I can't sell. I'm trying to figure out where should I put my stop loss on the lower time frames. So this is the hypothetical trade that I wanted to have. It's even making the risk to reward even better. If that gap do hold, it's really tempting to take this trade. I think that's what I'm going to do. I'm going to try it out. Because now the risk to reward it's just too good. If it do hold, it's worth it. So it's just touched the lower part of that gap. Remember, I'm going to be moving my stop loss into profits almost immediately on days like this. So we did get in about right where everything is at. Everything is lined up perfectly right here. And we're floating in profits very fast. So we entered this trade at 10:05 with 45 seconds. So that means we have to hold this trade until at least 10:08. Based on the Alpha Capital rules, we need to hold this trade for at least 2 minutes. As soon as 10:08 happens, if I'm in profits, I'm trailing my profits because this is a choppy day. Even though I do feel like it could go exactly where I think it's going to go, I don't know how fast it's going to do it, and I'm all about the speed and locking in the money. All right, so if we can get below this swing low right here. All right, if we can get below that swing low right there, where that arrow is pointing, by 10:08, that's where I'm going to first lock my some profits in. Obviously, I would love to have the full targets get hit, but we don't know how long that can take. So y'all know every time the targets get hit, that's when I'm not in the trade. All right, so we're getting real close to breaking below that swing low right there. I'm just moving some of my take profit areas on my EA Markets account. I'm trying to do this on 2 different phones all at the same time, so sometimes I am a little bit slow. It would be nice to trail from the 5-minute time frame, right? But like I said, it's a small day, so just to be safe with our profits, we're going to have to trail from the 1 minute and risk getting stopped out early because we are in profits right here. I would like to see this candle continue to the downside with some speed, but I'm getting ready to move my stop into Profitville just because this is a choppy market. I really want to emphasize that. So if it could give me at least TP number 2, I'll be more than happy with that. I'm going to really try to trail as aggressive as I can. So far, I'm up about almost 1,500 on my Alpha Capital, and about almost 600 on my E8 account. So I'm trying to trail. I haven't locked the trail in just yet, but I really want to trail aggressively. All right, right there, I'm trailing. I might get stopped out right here. Come on, keep going down. Keep going down. I'm trailing so aggressive. I only have like a 3-point difference from where price is at right now. Bam, got stopped out. So that was a quick scalp right there, you guys. I was going for the 7-1. Let's see, I got the almost 4-1. All right, so I didn't want to be greedy on that trade. I was only risking about like 400 or 500, and I made a good amount right there. Made about 1,500. And that's that, y'all. That's going to be the trade for today. And I'm going to end the stream with that. That's how you pretty much wait until 10 a.m. to find a good trade, right? You take that trade, you take the profits, don't get greedy, and then you walk away. Obviously it's still early, it's tempting, but we don't want to forget about all of this that happened earlier, right? All of this was that chop that warned you. It warned you. It said, even if we give you a move, you better take profits because you don't know what we're going to do today, right? And just the fact that it stopped right before the first TP was a bit annoying for me. I would have wanted it to just flush on through there and start moving with some aggression. I waited. I trailed it as hard as I could too. I was actually supposed to trail my stop the moment we got right there, but I just had to wait for a little bit more as it dropped down. So I'm satisfied with that trade. You guys witnessed it live with me. I hope y'all learned something from that. Like I said, just a quick review of how we, found this trade. Started with the hourly time frame. Right, quick review, and then we're gonna exit. All right, so we started from the hourly time frame. We marked out all of the swing lows and the swing highs. That's where those yellow lines are, right? I use those as targets, even on a consolidation type of day like today. All right, and then simply put from there, we just used ICT concepts, right? So we seen that how these candles were closing on this new week opening gap, right? The market went up when the market opened, came right back down. That's already a sign that it's going to be a BS type of day. Then we had our first presented fair value gap, which is where the sky blue box is at, right? Price went up into there. It respected it. And then from there, all we had to do was wait for the move to happen. All right, we used this gap right here on the 1 minute, right? You can see it a little bit better on the 2 minute, right? Because we was actually on the 2 minute when I found it. So we use this gap as a stop loss because, when we measured out our range right here from swing high to swing low, yes, this yellow line is pretty much where you want to take the sell, right? When price comes back up, it's going to go into a premium zone, and you always want to sell for a premium, right? So that's what we did. We sold. The risk to reward was there, right? It was a bit of a risky trade because I didn't know if that guy was going to hold or not. But because it went up so far, it gave me a really good risk to reward, which pretty much allowed me to trust it because now, even if it don't want to sweep the liquidity, which it didn't, right, we can still make a almost 4-to-1 risk to reward off of that trade, right? I made a 3-to-1. I was risking about $500, made about 1,500. So, and you guys can see we got out and we played it smart because look at what it's doing now. It's coming right back up. So that's trading, as much as we all want to sit here every day and take a million trades and make $1 million, sometimes you got to take that one trade and walk away. So I appreciate you guys for watching. I hope you guys were able to learn something from this video. If you did, be sure to drop a like, drop a comment. And no matter where you're watching from, whether it's Twitch, Kick TV, YouTube, Facebook, I appreciate all of the support that you guys give. And always remember to use code trucking if you guys are going to go and start your prop firm journey. And, if you want to learn how to get payouts, subscribe to the channel. You guys know all of the prop firms that I affiliate myself with that I think are pretty good companies. I have the affiliate links to those companies. Links are going to be in the description below. So appreciate you guys, and I will see y'all in the next video, man. Peace out.